Welcome to the Stock Unlock Clips channel. This channel is dedicated to pulling clips from our weekly live streams on the main Stock Unlock channel and posting them here so it's easy to find and access different talking points that we cover. Make sure to subscribe for more and come join the fun on our weekly live streams over at the Stock Unlock main YouTube channel every Saturday at 11:30 a.m. Eastern. With that said, we really hope you enjoy this clip.
Seems nice. So I guess to wrap up here, what are like some of the stocks that you've been looking at recently, like getting excited about? Anything to like leave us off here of like things that like we could research as retail investors, or like better ways to like look for value out there, especially with volatility being incredibly high. Like we also saw how the market closed yesterday. It was like kind of going up and then just steep sell off, which, you know, probably is big hedge funds like moving things around and stuff, not retailers, but we still deal with it. So yeah, like any advice like you have for, chumps like me who are like writing a lot of computer code and stuff that might not, be researching the market all day, but at least we have Stock Unlock to save time on that.
Yeah, you're right. We do. So what I've been noticing and where I've kind of been dollar cost averaging more right now is financials, because there's this general consensus that we're heading into a massive recession, right? Like there's this massive recession coming up. So a lot of people have sold off their financial stocks, like the Canadian banks, for example. They're some of the best banks in the world. They're now selling below their historical average price to earnings ratios. They all just reported earnings. In my opinion, the earnings were fine. The companies are not going under. Everything's okay. So I've been dollar cost averaging financial stocks more. And if they continue going down, I'll just continue buying them. It's fine. And then also real estate, because people think, rightfully so, in my opinion, that higher interest rates is going to slow down the real estate market. Home prices are going to come down. So REITs, their book value is going to come down. And when their book value comes down, their asset value comes down. They have to report losses towards net income. Now, these losses don't affect cash flow. These losses are all non-cash losses. So cash flows are not going to really be harmed, in my opinion, but people are going to see net income was negative $100 million. And what you're going to see when that happens, in my opinion, is headlines. This company lost $100 million this quarter. Oh my goodness. Like, this REIT is falling apart. It's not profitable anymore. Then you go and take a look at the cash flow statement, and you take a look and you're like, cash is still coming in. Everything's fine. Non-cash losses, right? So I'm finding REITs out there right now that are selling 20 to 25% below book value. Operating cash flow is continuing to grow. They're selling at low price to operating cash flows right now. And dividend yields are getting up to like 6%, because I don't think a lot of people want to own real estate right now. And the market's kind of sold off real estate in the foresight, I guess, that real estate's not going to be good over the next few years. So I think that the stock prices have come down to a point where I think they're very attractive. I'm buying what no one else wants, essentially.